We're here today to talk about changes to the individual tax law, most of which were put in place by the One Big Beautiful Bill Act in July of 2025. I have to say, I didn't look this morning. I looked on Friday, and much of what I'm going to say today was still in draft form on the IRS website. Things were not final form yet, so bottom line there, consult your tax advisor, make sure you're looking at final forms. I don't think much of this will change, but you never know with the IRS. They have not yet announced when they're going to start taking tax returns. Normally by now we'd know that date. We don't know that yet. The other thing I have to say is I've been trained by the AARP program called Tax Aid. I do taxes through that program. Been doing that for 8 years. I'm not here representing them. I'm here because I got a lot of training. I think there are lots of questions out about this, and the more you know about it before you go to get your taxes prepared, the better prepared you'll be for that and some of the things that are going to happen there. So, yep, One Big Beautiful Bill Act. I'm going to call it OBA from now on. Passed in July of 2025. What have you heard about it? This gentleman said earlier, no tax on Social Security.
A lot of people heard that.
Anything else you've heard other than what you read or before you read it on my handout? All right, so kinds of things we heard. No tax on Social Security when this was being debated. No tax on overtime, no tax on tips. Some sort of new deduction for seniors, what's that? Hey, they increased the standard deductions. So absolutely not in terms of Social Security. Social Security is being taxed the exact same way as it has been for I can't remember how long. Well, before I started doing taxes 8 years ago. Yes, some tip overtime will not be taxed under certain situations. The same with overtime and tips. Yes, there's a $6,000 per person deduction for seniors, but it also has limitations. I'll talk to you about those. They did, though, actually increase the standard deductions. Just to get your head around a little bit around taxes before we start going into the details of that. You start with your gross income. Everything you earn that's not exempt from taxes. So for one of the things that exempt, you can get some exempt interest on some bonds and things. So everything, you take some adjustments off of that. Some of the big ones are IRA contributions, student loan interest. You get to adjust your income for that. And so then you have what you call your adjusted gross income. So impacts lots and lots of calculations. Whoops, wrong side. So you take that AGI, and then you have deductions. You can either have a standard deduction or your itemized deductions. There's been something in the past called the qualified business income. If you have a small business and some investments you do might have that. And 4 new deductions created by OBA, in addition to the standard deduction or itemized deductions. So those are on top of that. That gives you your taxable income. So let's look at the standard deductions. So that was adjusted basically by $750 per individual. So those are what they are. The standard deductions for senior and blind is remaining the same. And the married filing joint for the extra spouse is remaining the same. So you can maybe find yourself in this list. You know, if you're under 65, single, 750. If you're married filing joint, both over 65, 34,700. Find your number in there. So you just kind of have it in your head as we're going through this, or calculate it if I didn't calculate it for you. Okay, all set. So like I said, there's no change in social security taxation. So this is the way it's been. If you're an individual that's single, married filing separately, head of household, those are all considered single filing statuses. If you're below $25,000 of what they call modified adjusted gross income, which is 50% of your social security benefits added to any other reportable income minus those adjustments that we talked about. So, and then you get up to a max of 85%. Same kind of concept, the married filing jointly, they go up. I'm just going to show you a little bit of slide. This slide has two examples on it. The red line is if you're single with $20,000 of social security income. And the line down here is your total income with your total social security. So if you had $40,000 total income, so $20,000 in pension and $20,000 in social security, your tax or taxable will be what's that, about $3,300, right? So that's kind of the way you read this chart. But there are forms and stuff in the IRS website where you can go in and actually put in your data if you want to check your number for sure. And then the blue line is married filing joint with $30,000 joint social security. So at this point here, say 70,000, so that would be $30,000 of social security plus $40,000 of pension and interest and other kinds of income. And you tax on $15,000 of your social security would be taxable. Okay? Losing anybody? Everybody okay? All right. How did that get up there? What is that?
Is it okay?
Okay, so this is another thing. It's not a part of OBA, but there was passed. Is anybody here a former government employee? You can see a couple of folks raise their hand. We received adjustments to Social Security, and there was a lump sum payment associated with that because it went back to the beginning of 2024. You received that payment in 2025 as a lump sum. All of that taxable under those same rules we just talked about. So, you're gonna basically, you're gonna have a big adjustment, or maybe not big, it depends on how much you were getting. So some adjustment to your social security, that's gonna be taxed in a way that the IRS says is a lump sum calculation for that. It may reduce your taxes, it may not. I mean, if you're at the 85% of your social security being taxed, most likely 85% of that lump sum is gonna be taxed. So, but just to remember, that's gonna affect your social security. It's gonna affect your income. It's a lump sum you got this year. So if you're over 65 and getting the mass circuit breaker, it could affect your income for that. In addition, with that lump sum, it could boost you to a higher tax bracket, possibly. So it's all gonna play out. We probably won't know your exact situation until you end up sitting down and actually doing your taxes. So OBA created 4 additional deductions. Deduction for seniors, a deduction for loan interest on a qualified vehicle, qualified overtime deduction, a qualified tip deduction. As I said earlier, these are all additive to your standard or itemized deduction. So it's, they're going to be put on a new schedule, Schedule 1A, which is of the 1040. Those are, it's a 1040 form. So the enhanced deduction for seniors. So yes, you get up to $6,000 per eligible senior. So if you're married filing jointly, you could get up to $12,000. It's not available if you're married filing separately. And it decreases by $60 per $1,000 over the phase out value.
What's that mean?
So let's just say you're married filing jointly, your NAGA for this is $200,000.
MAGA stands for,
Modified adjusted gross income. Remember, we talked about that a little bit earlier. So assume that's $200,000. So you're $50,000 over this. So 50,000 times, that's 3,000. So your single one would be 3,000, deducting 3,000 from the 6,000, so you'd be $3,000. And then if you were married, if you are married, your wife gets added to that. So you'd have a $6,000 deduction, not a $12,000 deduction. Okay?
you could be $60 for everything, so if you were $50,000 over, that's how much?
That's $3,000, right? 60 times 50, 60 times 50,000,
Okay.
or 51,000 times. Okay,
Yes.
so for, it phases out over $100,000. You can think about it that way. Married filing joint phases from 150 to 250,000. So if you have more than 250,000, you're getting none.
But you still get 6,000 because you're filing jointly, right?
No, nope.
Okay.
No, it's the way the IRS says to calculate it is to calculate it for the taxpayer. So that's for one person on the return, and it's $6,000. Then if you are married filing jointly, double it.
Okay.
Okay? Okay? That's this spouse's deduction will be equal to the taxpayer.
Yeah.
You have to have a social security number for this.
Yeah.
And it's only available through tax year 2028.
So if you were $250,000 a month, you get nothing.
You'll get nothing. And between the two, it's a linear line between the two.
Got it.
Okay? And for single, it's $75,000 to $175,000 is kind of the range that phases out over. Okay? So somebody said this earlier. Let's assume you're under 100, you're married filing joint and you're under $150,000. You're both over 65. That means you have 40, you have your standard deduction plus your senior deduction. Basically means you have a deduction of $46,700, almost $47,000. So if your adjusted gross income is under $47,000, there's no need to, I mean, you might think you want to itemize, but you don't need to, because all of your income is going to go away and you're going to end up with a zero taxable income. Okay, so, you can think about that.
Technical question, just on the bottom line, your example, the 12,000 is part of the OBBBA.
Yes,
Is the extra 3,200 also part of the OBBBA?
Nope.
That was gonna happen anyway.
that was going to happen anyway.
Yep.
Yep. The thing that happened because of OBA is this number is up $1,500. If you had looked at the IRS website in January, it would have said for married filing jointly both over 65. I'm sorry, married filing jointly, it would have been $30,000.
Got it.
OBA made it 31,500.
Okay.
Okay. Qualified new car loan interest. If you bought a car or put a loan on a car that was a new car, so basically you bought a new car on or after January 1st of 2025, had to be assembled in the United States. You have to have a VIN number to prove that. It has to be a personal use vehicle. basically under 14,000 pounds is what they consider that to be. Again, there are income limits on it. So if you're under 100,000 or under 200,000 married filing jointly, you can claim this. A social security number is not required for this. And again, OBA was, a lot of this stuff is not permanent. It only goes through tax year 2028. Questions? Qualified overtime. Again, how many people actually might get some overtime in this room? Okay. So very quickly. That there's a limit to how much qualifies, there are phase outs associated with it. The person who's claiming that overtime has to have a social security number available for tax year 2028. What's qualified overtime? Basically, Fair Labor Standards Act, is that backwards? LSA. And the key thing to remember on this is the deduction is limited to 50%. So if you were working somewhere for double time, because they gave you double time on a Sunday, only 50% of that, only 50% of the overtime pay would qualify. And it's only the bump for overtime. So if you're working for time and a half, the half. So basically, it's all the time you worked overtime, the half is what qualifies. Qualified tips. Anybody working for tips? I'm gonna talk about it. Again, very quickly, there's a limit on how much qualifies. It has to be a documented tip. So if you're not gonna claim it on your, you're not gonna tell anybody about it, you go to your tax preparer, you aren't gonna tell them you have money in your pocket, they're not gonna be able to deduct it because you didn't tell them about it. So, and that applies whether you're an employee or self-employed. It's occupation specific. There are, again, phase outs associated with it. You have to have a social security number. And again, it's part of OBA, so through 2028. And then what's an occupation that's qualified? These are the ones that the IRS have said are, we're normally tipped before, before 2025, 2020, actually 2023 is what they went back to look at this. And there's a big long list. This goes on for 15 pages or something of actual titles of jobs and stuff that would qualify for this. Okay, it changed the state and local tax cap on Schedule A. So if you itemize deductions, since 2017, the last big tax law change, you've been limited to, if you're itemizing deductions, to only $10,000 of state and local tax, real estate taxes, state income taxes, excise taxes, things that are your local taxes. That has been limited to $10,000. OBA pushes it up to $40,000. And it's going to increase. This is actually through tax year 2029. And then it will revert back for tax year 30 to the 10% cap, $10,000 cap. And again, there are phase outs associated with it, pretty high. So, anyway, the people I do taxes for are not gonna get this. There's something else. Oh yeah, so if you have high real estate taxes and you haven't been itemizing the last few years, you might want to take a look at it. So other provisions, basically they expired all the energy credits, and it's too late now if you don't have one. For clean vehicles, basically electric vehicles. After September 30th, if you were making home energy efficient improvements, that ended on, December 31st. It had to have been installed, bought and installed by December 31st. And then there are some other permanent changes that affect 2025 and beyond. So before the 2017 rule, they didn't yet index your tax rates, or they might not index your tax rates or standard deductions. They've made that a part. It's gonna go forward and it's a permanent thing. Before 2017, you had something called a personal exemption that was basically set to zero by the 2017 rule. It is now gone, so it's not there anymore. A 529 plan is an educational savings plan, and there used to be pretty limited. It used to have to kind of be a 4-year college, 2 or 4-year college, and now they've expanded what that can apply for. There used to be miscellaneous expense deductions, like having your tax form prepared used to be something you could write off. Those are all permanently eliminated except for teachers and other school personnel getting things. And there's no moving expenses anymore except for military personnel. There is something called the child tax credit. Anybody have a child? There you go, Dave. So this is, they've made it permanent. They've said they're going to index it every year. And basically, the child is a dependent who's 18 or under, or a full-time student, 23 or under. And you can get up to $2,200 per person. One of the people has to have a social security number if you're married, filing joint. The income limits are the same. And there's something called an other dependent credit. So if you have somebody else living with you, or you're supporting your parents, you can get a $500 credit for that, and that remains the same. Charitable contributions. So this now we're moving on 2025. This is not applicable for 2025, but you ought to start planning now. In 2026, if you do not itemize, you will have up to $1,000 if you're a single filing status, up to $2,000 if you're married filing joint, that you can deduct on your federal income taxes. Again, that's whether or, if you don't itemize. If you do itemize, then, currently if I made I was itemized and I made $7,000 in deductions, all $7,000 would be put there on my Schedule A to count towards my itemized deductions. It's going to be limited to over 5% of your AGI. So if I had $100,000 of income, the first, what's that, $500? The first $500 would not count, and I only have $6,500 that I'd be able to claim. It's kind of like the medical. I don't know if you guys look at medical, it has to be more than 7.5% of your income in order to qualify as a medical deduction. It's kind of like that, but this is only 0.5%.
So in 2026, even if you take the standard deduction, you can take up to an additional 0.5% of your adjusted gross income as a deduction. No, that's not saying.
No, if you're not itemizing.
You're not itemizing.
You're not itemizing, you can take, if you're married filing jointly, up to $2,000.
That's new.
That's new. That is new.
Okay, got it.
Federal government had nothing like that.
Great.
I'll just throw in, Massachusetts has had that for the last 2 years, I think. We've been able to deduct it on your mass taxes. We don't know yet how Massachusetts will react to this. I know. So save receipts, or at least $2,000 of them, even more for your mass taxes. At least that's, last I heard it was maybe $5,000 if they put a cap on it. They haven't capped it
Yeah.
up till now,
Massachusetts?
Massachusetts.
Now, you don't have that in your handout.
I don't have
I
Massachusetts in my handout.
No, you didn't have the $2,000.
Oh, I thought I added that.
I didn't
Okay,
see that.
all right, I'll look. So this is something, again, if you have young kids or grandkids, their parents could do this for them. Trump has started basically an IRA account for young kids, born, first 5 years. For these years where OBA applies, they can get one of these, and if they're born in that time range, the government's gonna put $1,000 into this account for them. It's basically an IRA. The annual contributions will be given to 5,000, not deductible. It's kind of like, I'll add to it, it's kind of like a Roth IRA, right? And they say it's gonna start officially in July of 26. There's some things we've said that you might be able to apply for it with your 2025 tax return. So if you have kids who had kids, or not a brand new one, okay. They should keep their eye out on how to get this $1,000. It's basically a free $1,000 from the government. In September, the IRS said, they told us we can't deal in paper checks anymore, so we're gonna stop dealing in paper checks. And they said in September, we'll phase them out to the extent provided by the law. You should be ready to get a refund by direct deposit. If in the past you've been reluctant to get a refund by direct deposit, you don't want to give your bank account information to the government, there are something called prepaid debit cards that you can get that have the same type of information on them. If you're receiving Social Security without a bank account, your Social Security could be going to one of those prepaid debit cards, and my understanding is you'd be able to use that card for this. So if my understanding, what my most recent reading of this is, if you say, I want a paper check when you file your return, the government, the IRS is gonna turn around and say, we told you we weren't gonna give out paper checks, so tell us this information, or tell us why you cannot possibly get this money electronically. And that's gonna delay your refund by another 4 to 8 weeks, probably. So if you want your money, the direct deposit is gonna be, it's not gonna be required. There are gonna be things you can check, but one of them is not gonna be, I just don't want to give you my information. You're gonna have to find another thing on the form that applies. So they don't wanna get checks, but they'll take money however it'll come. So I think this year for sure, they will still take money via check. So if you owe money and you wanna write a check to pay them, you can do that. They also have some online ways to pay them.
Because
That they'll
before,
have available.
if you tried to pay them by credit card, they charge you more.
Yes,
So I either had two, it's either credit card or check, so I'd always send them a check.
right. There is an online payment system that you can use that does not have, where you could put in your bank account information and they'll take it from there. Okay.
That's new.
The last few years, that's been in place.
And as far as the, like the prepaid debit card,
Mhm.
will there be a charge on that?
No, let's see, before I say that, it's
Yeah.
dependent on who you get it from. The one that Social Security has, does not have that. They're on the Social Security site, and I can't say exactly where, but on there, it tells how to get that card, and who the provider is, and you can go to them and they will not charge you a fee, so far as I know. And Jeff, my Erstwhile compatriot over here has a comment.
Just something on those debit cards. If you have a bank account at Bank of America and you've got a debit card, that won't work. Okay? But you've already got a bank account with them, so you can provide that information. What they're specifically saying for this card is a specific card that will have a routing number and an account number to itself. And Social Security card, you know, the debit card associated with Social Security is one of, and at the moment, we only know of maybe one other that's out there. There may end up being a big market for somebody to start issuing these types of cards, but.
And they decide what card that's gonna be. So like say Social Security.
Yeah, Social Security, I think, has a dedicated vendor that provides that
I
card.
see.
So if you go onto your Social Security account online and you can say, look, I don't have a bank, you can apply for that debit card. It's in flux, as Ann said at the beginning. For all we know at this point, they're gonna issue paper checks this year and not
Don't know.
after that,
Right.
but we don't know.
Thank you.
So do you think when you're paying your 2025 taxes, if you pay it by paper check?
Yes,
Maybe this will be the last year we can do that.
pay, they'll always take your money.
I'll always find a way to take your money. So, I mean, it does say they'd like you to make payments electronically, but, and their regs say that.
Okay.
But certainly for 2025, you'll be able to mail in a check.
Yeah.
Yes.
Yeah.
Yeah. So I think this is my last slide. So you are gonna need to take your social security statement to your tax preparer, whoever they may be, because it's taxable. As we learned at the beginning. If you have tips or overtime or car loan, bring all the information you can gather around those things. Your W-2 should have some information on it. There are forms that you filled out that said, these are the tips that I got. Hopefully your last paycheck might have your overtime, your overtime pay separate from your regular pay on it. Obviously your bank details, your 2024 tax return, absolutely required if you've got a lump sum payment. Always good for a tax preparer to have to compare as they do it from one year to the next year. If you go back to the same tax preparer every year, then they probably have it. But if you're changing preparers or going to a new place to have them done, it's always a good thing if you have your prior year's return with you. So, questions? Did I see a hand moving over there? No? Okay.
I didn't understand the $1,000 child gift or tax deduction for an IRA. What's that all about? Like, you say you had a grandchild and you wanted to give them a gift of $1,000. You can do that today.
You can do it today, but this account will be set up by the government. The government is gonna, again, if they're born between 25 and 28, the government's gonna put $1,000 in there.
They'll match your $1,000.
No. The government's gonna put $1,000 in there,
Yes,
no matter whether you put any money in there or not.
really?
The government's gonna put $1,000 in there, and then you can put in, you or your parents or their aunt can put more money in there up to another $4,000 per year. So there will only be one payment by the government for $1,000. I saw something that, who was it's gonna put $250 in, one of the big tech guys. Robert Dell said for some part of the population, he's gonna put $250 into the kids' accounts. And so.
Now, that's for children born, newly born in the year,
Yes,
not for children that are already born.
that is correct. There is something about they're gonna,
22 to 2025.
Hmm?
Between 2022 and 2025.
Oh, back, okay, so it goes back a little bit. Okay, yes, sir.
For Medicare, is there any change in this income related monthly adjustment amount?
The income related to what?
Irma. Income.
Medicare.
The Medicare one. It changes, that changes every year.
Every year.
I don't have that number in my head, but that is what,
Normal change.
just the normal change for the,
Nothing is changing how that changes.
Okay.
right, the Medicare, stuff we owe extra Medicare payments is the same. I saw another, did I see another hand?
My question was after like 2028, because all of these like stop kind of in 2028, will this new rules come in or they just like dissipate, like?
Well, so a whole bunch of stuff that was, supposed to expire this year, when they passed this law, didn't expire. Help me, guys, because I can't remember any of them anymore, but there were things that were gonna go away.
State tax, threshold.
Right, the threshold was supposed to go away. It didn't go away, it went to $40,000. There was another big one that I can't remember right now. Well, one that, I mean, one thing that did go away is the exemption for, right, personal exemption. That they said, well, we'll temporarily put that on hold. They made that go away. So who knows who's gonna be in charge and what they're gonna do, 4 or 5 years from now. Don't know.
If your crystal ball's better than ours, you're on it.
Yeah. Yes,
Did you say for tax year 25 that the deduction for the tax preparer is gone going forward?
yes, it's already gone. It was one of the things that was eliminated in 2017, and it's been made permanent. It's been made, so never again will we talk about that, to the extent that you can say never again with the government.
For the Trump account that's being initiated, that's for tax year 26.
No, it's for tax year 25. No, wait a minute.
Begins in July.
It begins in July of 26, correct.
Effective 4/26.
Effective 4/26. Yes,
And what's posted now is all draft material?
Yes.
It could still,
right, it could still change. And exactly how they're gonna implement it could still change.
that's the,
So let's go here and then we'll come back.
Okay, so it's kind of, so the drafts, how long until it becomes finalized?
Well, let's gonna say they're gonna have some rules in place that they're running the 2025 tax season by. So, a while ago, they said we will not delay the 2025 tax season, which would mean generally that it would open the last week in January is when it would open. But as I said, I think earlier, they have not yet announced the beginning of the 2025 tax season.
Awesome.
So we don't know when we do not know yet when we can file a tax return. My expectation is we will find that out within the next 2 weeks or so. But again, I don't know for sure. And so, they're gonna have to have something that they're calling not a draft by that time. Because, all the software vendors have to know exactly what they're supposed to do. They've been working under these draft rules. The assumption is they're probably not gonna change much because, if they change something drastically, that's gonna put off the whole season. They've been doing their own programming based on this, so. It's not an easy thing. Okay? No more. Any other questions? Yep.
Sorry, this might be.
No, that's good.
But, so say like the tax season gets pushed,
Mhm.
would the ending of the tax season be pushed as well? Yeah.
I don't know. I don't know. So the last time I remember the ending of the tax season being changed was in COVID. When when basically they didn't stop the tax season, but everybody stopped doing tax returns. Because they were, they couldn't go to see anybody to do it. So, and then they pushed it out to the, middle of July. I'm sure, I don't know. I don't know. I would hope they would a little bit on one side, on the side of getting them done. As being a tax preparer, I'm kind of like, just let me get them done and over with, April 15th in my head. I've got plans for April 16th to go on vacation. So let's not extend it. Anything else?
The definition of MAGI.
It depends. It depends on what deduction or thing you're looking at. There are at least 3 or 4 basic kind of ones. Most of the, I mean, basically, where is that slide?
Yeah, I remember one of your slides, and it said 50% of social security, but that didn't,
Right, so,
it didn't sound. The other way. Higher. Oh.
so this slide. This is really the social security based one. Where they add 50% of your social security to all your other income. But if you kind of take that out of the loop, you figured out how much of your social security is taxable. You take the taxable social security and add it to all other reportable income. Actually. And some of them subtract his IRA contribution, some of them don't. For the OBA ones, you add in any foreign earned income that is not somehow excluded from some things, is included for that, so. Yeah, for us as doing tax returns, the software does it all. So, we make sure we put in the numbers in the right places and call them the right things, and then it knows what number to use for which.
Any changes to the Massachusetts, taxes?
Any changes to Massachusetts taxes?
Minimal. Yeah.
Very minimal that we are aware of. There hasn't, the Mass Form 1 is still in draft. The Mass Form 1 is also still in draft. But from reading the draft itself and looking at it compared to prior years, it doesn't look like much is changing. And I don't recall any tax bills that passed Mass legislature this year that would affect things. I've heard some things talked about, but I didn't hear of any of them passed. The one I heard kind of, hey, we ought to maybe limit the charitable contributions to some number, either as a percent of income or, a hard stop, like no more than $5,000 or $10,000 can be charitable contributions that are deducted. Those are but that as far as I know, that didn't pass anything.
I think there is a change. So if you are a live-in provider of care to a family member or even a non-family member, but you gotta live in to provide this. And you get paid through the state Medicaid program, that some or all of that's gonna become non-taxable income.
Right.
Again, stay tuned, we haven't seen any detail.
Right, that was we saw one little bulletin that said the IRS had ruled that case had gone up to the IRS and they had ruled on it, but we haven't understood yet how they're gonna,
And basically,
how they're gonna, it's gonna be called a Medicare rate of payment, which is non-taxable. Okay, anything else?
That's not even part of it's savings bonds. I bought one years ago, and if I cash it in, it's gonna kill me.
yeah, I mean, it's taxable interest.
Yep.
Yes, it is, no? I don't think, you can't even donate.
Yeah.
I think you can. So thanks a lot for coming. We'll take other questions kind of offline, but, we'll call the session over and, and then we can take some more questions, okay?